Welcome. This is our panel on the retail banking revolution or evolution, depending upon how you want to read that, and how mobile-first consumers are changing the dynamic of retail banking. So I'm Chris Milner. I'm the market lead for FinTech and payments at North Highland. And in a minute, I'll have our esteemed panel here introduce themselves. But first of all, if we think back to the mid-1990s when the first internet-only banks and the first online banking providers were coming around, and then the advent of mobile banking in the mid-2000s, and then just in the past week, we've seen announcements about Bank of America opening up the first branch that's fully automated with no employees. There's been a tremendous amount of change that's been happening in retail banking over the last 2 decades. And in recent years, one of those forces that's really been driving that is the mobile-first consumer. It's changing how banks are thinking about how I serve my customers. It's thinking about the solutions they're offering to them. And that's really going to be our focus here of this panel. So I'll give everyone here a chance to introduce themselves and briefly say what they do. Then we'll get into the discussion, and I'm hoping if they've got the microphones ready, we'll actually try to allow a few minutes for questions at the end. So, Jikin, you want to start?
Sure. Thank you, Chris. So I'm Jikin Shah. I work for SunTrust Bank. I'm responsible for omni-channel sales and services technology, and I'm also leading bank-wide transformation we call Business Accelerator.
So I'm Lynn Loby. I work for Cardlytics. We are a data and analytics platform. Our foundation is $1.5 trillion of consumer purchases that we see annually, and we use that to apply analytics to do all kinds of things with advertising, real estate, lots of applications.
And I'm Shira Frost, Director of Product Marketing at Fiserv, unlike the slide said previously. And I'm working our digital banking group, and I'm responsible for our online and mobile banking solutions, specifically our Carillion Online and mobility products.
And I am George Kelly, Chief Operating Officer and Chief Financial Officer for Grow Solutions. We have a mobile-first software application for account opening and lending for financial institutions.
So we've mentioned already a bunch of times the mobile-first consumer. Shira, I thought I'd just start with you. You're in product marketing, and tell us, what do you think of when you hear the term mobile-first consumer? What do they look like?
Well, I think there's a lot out there as far as definitions around mobile first, mobile only. I've kind of heard them all. Really, mobile first is that consumer that uses their mobile device as their primary means to access their banking account, conduct transactions, etc. As far as what they look like, I would say really they are millennials. Millennials is definitely kind of the obvious choice. They definitely look like millennials, but there's all of us. I think many of us use our mobile devices primarily for most of our activities, as well as there's another group that I don't know if we talk about as much, but the underserved market and underbanked consumers. A lot of them are mobile-first consumers, a lot of times because they may not have access to their internet but through the mobile device. So they're not necessarily have a desktop or online tool at home, so they actually go through their mobile device first.
So how are these consumers interacting with banks and choosing their banking partners differently? For anyone.
I'll go. We integrate with all of the bank's mobile and online banking devices. That's how we receive all of the transaction data that we use. And the mobile-first consumer is looking to get in and out very quickly in whatever transaction they're doing. They're very specific on, is this a transaction? Am I shopping? Am I in a social network? What am I doing? And based on what they're doing, they want an app that is very specific to what they're looking to do right now. They want it fast, they want it quick, they want to get in and out. And I do think it's one of the challenges for financial institutions, large and small. Many of them are taking all of the features that they have in online banking and just trying to cram that into a mobile experience. And that's not going to work for people who are looking to do things first and frequent on their mobile device. at least my opinion.
Yeah, and there have been surveys, studies that have shown that, increasingly decisions are being made by convenience. Whether it's, there used to be the branch network, ATM network, and then more recently, the mobile experience and people deciding their financial institution based on how good the mobile experience was. And I think over time, as you'll see people become more comfortable, but it's going to become more and more important. At the end of the day, it comes down to, and both of you all touched on it, is convenience. I remember back as a young pup, product manager for a company, a Norwegian company, and then I'd have my colleagues come over and say, "Oh, you Americans are so lazy. You drive through, you won't get out of your car to go to the bank," because they thought, conceptually that we were just lazy. And well, they understand it's the efficiency and the convenience. We live a busy lifestyles, very active lifestyles, and people are going to gravitate towards things that increase their productivity and make them more efficient. And again, they use it. More than 50% of people are using the cell phone while they're sitting in their home. I mean, they can get up and they can go to their PC and do it, but they don't.
But if I could just add to that, it's convenience or some kind of value transfer. I mean, one of the things that I think is interesting is we can see how many payments are done online, in store, and through digital wallets. And digital wallets they're not taking off yet. They will someday, I'm sure, but right now there's not enough, swiping a card is easy, so there's not enough incremental convenience to use your watch or your phone to pay, and there's not enough value transfer to incent the consumer to do it. So it has to be convenient, or there has to be value transfer. It has to be something that they're looking for. Yep. They will not, mass consumer adoption will not happen just because something's cool, which I think is what people are hoping for right now with digital wallets, and you're not seeing it.
So I agree with what the fellow panelist is saying, right? And this goes back to how we define mobile-first customers, right? Because there are varying degree of definition. For me, specifically, this ties back to what the SunTrust purpose is, which is helping clients move from financial stress to financial confidence. So what does it mean, right? Individual or a client don't have a specific 9 to 5 window where they will have question about their financial need or stress related to it. So no matter where they are, what situation they are in, when a thought comes to their mind, which requires some sort of financial products or services, or a stress inducers, how we can identify those needs and then provide necessary information or education or help them get into the necessary product and services to move them from stress to confidence. And how whoever is going to figure this out quicker is going to lead the charge. That's what I think.
So have y'all really mapped out that customer experience, that journey that the customer goes through to understand where those stress points are?
So we are taking approach as part of the business accelerator transformation. We are bringing the cross-functional set of business, technology, operations leaders, as well as our key partners from third party, whether they are software provider or a consulting companies, and going through the vision and design thinking exercise, putting our client first, front and center of it. What does this client want? What are the circumstances or needs this client is going to go through in that particular life based on where they are, and how we can make sure that SunTrust is there when they are having that particular need, and we can help them guide through whether they are looking for just extra information, are they looking for education, are they looking for some sort of advice or coaching, and then help them select the right products rather than pushing the products what industry has done in the past.
So Lynn, Cardlytics has helped banks think about how you market to consumers and encourage loyalty as well as connecting them up with other partners. If mobile consumers are interacting with financial institutions differently, how do those institutions need to think about how they market to those consumers?
Yeah, I'm going to build on some of the things you were talking about. Consumers have needs. I need a loan. And then they have things that are important in their lives. I like to work out, or I, want to share pictures with my friends, or whatever it might be. Banks are incredibly well positioned to understand both, because people have a need, like a loan, and banks see where and how people are spending their money, which helps you understand what their life priorities are and how they're changing. So I do think banks more and more need to use all of the data that they have to better understand when a customer has a need, and to better understand just what's important to the customer and how that's evolving over time. And you can see it looking at somebody's transactions. And I think banks need to use more and more of that to be able to be involved in not just I have a need, I should think about my bank, but get involved in the flow of commerce and helping push the flow of commerce with their customers. And they are well suited. It is amazing how much data banks have. And we're fortunate to have it too, but boy, you can do a lot.
Yep.
It-
Oh, sorry. I would just add I think another way to increase engagement is even through things like alerting. And that kind of, really helps the consumer with their financial management, whether you're alerting them to a bill pay due or, balance low, that type of thing. These are opportunities to really help them, and then you can actually make them actionable. So, hey, notice your balance is low. Would you like to transfer from your savings to your checking? I think, these type of things, the way we can help them and even utilize tools like alerting to do that can help increase engagement and relationships with customers.
Or I noticed your balance is low and you went to Papa John's last week. Let me help you save some money on Papa John's this week, right? Which is an example of the kinds of things that banks can connect to identify needs for consumers, even if the consumer doesn't really know they have that need.
Yeah, it's like fitting into their lifestyle. I mean, if you
That's
as a
right.
financial institution can fit into that lifestyle, kind of mirror that, and be supportive of it, then you're going to be right where they are, and so you'll be of use to them. If you don't fit into the lifestyle, you will not be of use to them.
I
And
think
one
it's
of the things I would say is interesting. Echo, the Amazon Echo, 5 million units shipped so far, and I haven't seen a lot of financial institutions taking advantage of the capability there. All the voice, voice recognition has been around since, or language really recognition has been around for years. And with Siri and some of those other things, that's really just starting to become into its own. And that, again, fits right into the people's lifestyle, become more comfortable with talking into things and getting responses back, and that becomes the new user interface. So that's, direction I think we're at least us as software providers, one of the things we should be thinking about going and fitting into that lifestyle, that busy lifestyle.
So, Jicken, are banks really ready for all this data, or is all that data still sitting in disparate systems all over the place?
So I agree with what she said, right? The banks have more data than we can analyze and process, right? But it's not just about the data that bank has. It's about bringing the data that bank has about the clients, which are existing clients, and then aggregating with the social data and information that's outside. And how do you mash it up to understand the needs that's happening? So if there is a client or a prospect putting something out in a social media or going through a specific, I would say, moment in their life, how can we identify, tap it, and then through the mobile banking or some other way, alert them and say, here's what we can do for you. So for example, if our client is applying for home equity loan, how can we aggregate with external third-party provider, whether these are the Handymans of the world or the Home Depot and Lowe's of the world, and then bring those offering at a discount to the client at that moment and say, hey, you took the home equity line from us. We know you are doing something with your house. Can we make that journey or experience smoother? Because if you use this handyman offering through a third-party company, right? Not only you are going to get 10 or 20%, means you are going to save the money, but we have done the due diligence behind the scene that these are going to be a vetted out process, right? Something like that. So it's not just about the data that we have, how we bring the data we have, plus the data outside, and attach it to the specific moment the client is going through. Does that answer?
Yeah, and that was specific to data. What else do retail banks need to do differently? If you're a banker and you're looking internally at your operations and your systems, what do banks need to do differently to service these mobile-first consumers?
Well, I think it's a little bit of what I said earlier. I think the banks are trying to create a one-size-fits-all mobile experience that kind of looks the same for everybody. And I'm sure you've all done it. You log into your mobile banking and there's a credit card offer, and then there's a, bill pay offer or whatever, and it's the same for everybody. I think banks need to both think about splitting up these experiences. There's a difference when a customer wants to transact versus when they want to shop. as an example. So how do you split up the experiences so it's not all crammed into one app? And then how do you use your data? And I totally agree with you. It's not just bank data. You got to understand all of the consumer data. How do you use that to make sure that if you're showing somebody a loan offer or a credit card offer, it's because they have some need that your data is indicating they have versus you're just trying to cross-sell them something, which I do think banks have been a little bit guilty of just doing a lot of cross-selling and just sort of hoping, right? Sort of spray and pray marketing.
We've all seen those splash pages that, are for something you have no interest in whatsoever or already have. So.
Completely unfocused. And then even if they do accept the offer, the half of the financial institutions have no way to actually fulfill that via digital channel, via mobile or even online.
Yeah,
So
great point.
Yep.
it's an empty offer.
So to add on to that, when you ask about what the retail bank has to do differently, I look at it way broader than just the technology aspect of it. So it has to start from the mindset. So what we are discussing here, the mindset of the leadership has to orient towards that and say it is not about transaction anymore. It is not about pushing products. It is about we being there as a trusted partner in the client's journey to move them from stress to confidence. And what does it mean in terms of culture? What does it mean in terms of the traditional channel world versus the operation world that exists in the banks, right? So when a client is going through the mobile experience, let's say at 8 p.m., and if the experience is going to be you are on a 20-minute hold on a phone because you have some specific question because it's a complex transaction that you are going to push through mobile banking, if the experience is not going to be what we get from, let's say, from a full self-service, the Amazon, Google of the world, or my personal experience of, let's say, when I call Costco and say, I don't like this thing, immediately it's like, just return it. It's a frictionless experience because they are putting client first as part of the core DNA of the organization, right? So how do you bring the mindset, the culture, the internal processes and enable those teammates who are going to help clients when they are not using the full digital service? So if they are in front of you in the branch, if they are calling you through contact center, can you offer that type of quick in, quick out experience? That's what the mobile customer is expecting. So it's not just about what you offer through mobile phone or tablet, it's about how you bring the entire bank, because that's what the experience customer is expecting. I'm quick in, quick out, right, when I'm on a phone. Same thing has to happen across the channels.
Yeah, and I was going to just add, I think that a lot of that has to do with making your app simple, easy navigation, intuitive, the kind of quick in, you're meeting them where they are. So if they're at the checkout counter, they can actually look at their mobile device and see, hey, here's my balances real quickly. I can snap a button and see my balances.
Yep.
Just being able to really also use the unique attributes of the mobile device is going to be something different that you can do and allow it to not just extend the online banking channel. You can actually use things like mobile deposit, mobile photo bill pay, even the Touch ID biometric authentication for a quick login to really help that mobile first customer out and so that they can get it done and keep it moving.
Yeah, and I think keeping it simple. So we worked on a project where we had a financial institution that had a 54-question application, and so whenever they ran a marketing program, they had a huge spike in traffic of people going out trying to apply for this particular product. It wasn't mobile optimized, so people pinching and zooming on their browser, and so we worked with their underwriter and said, well, what do you really need? Do you really need 54 questions? They said, well, you know what, we really only need 9. So we get rid of all the extra questions, and we just we put in those 9 questions, and then once that thing got rolled out, I mean, they paid for itself within, I think it was like 6 or 7 months, and because that's all I really needed. But they were just so used to, well, we've always asked these questions. Well, some of those questions you can ask later in the servicing application. You don't want to lose the sale. You want to make it easy for the customer to get in or to acquire the customer in the first place, and other things that are unique to mobile in particular. And I would really say not even is more generally applied, not just to mobile, but even into online. You want the simplification, but using that is specific to mobile, carrier information. So we have an arrangement with carriers where we can identify the user, bring down information, so less work that they have to do. We can actually pre-fill to move them along within the application process to reduce, again, abandonment. It's all about, convenience, ease of use, and speed.
It's something that Jicken said earlier about omnichannel. I mean, really, we hear a lot about omnichannel. I'm not sure many banks have made a whole lot of significant strides towards a true omnichannel experience. I mean, I think I go back to the pre-World Wide Web banking days and understand what that experience was like at a branch. But really, these mobile-first consumers, don't they really want to, it's not that they only want to do mobile, but that they may want to start it there, that's their primary method, and when they do switch to another channel, they want to be able to pick up where they left off, right?
Correct. Yes.
And, I mean, are banks at a point where that's going to happen in the near future, or is that still years off?
I think it's happening in pockets if you go deep, and what it means is that your example about where they left off on a mobile or a tablet phone, can they pick it up there? It's what happens behind the scene, right? Is there a process and technology consistency? So the experience we are offering to our clients through mobile or tablet, right, or online, when they go and there is an employee who is helping, right? Are they seeing similar type of technology and screens, or are there two different system technology and two different processes?
Or do they even know that this person
Correct.
was looking at this
Correct.
on their mobile device?
Like we always use this example and say, if someone has tried something on mobile and have a challenge, let's say not able to log in, for example, and if you get a phone call, are we able to proactively call them and say, sorry, you had this inconvenience, right? We are working on it. Or here's the reason it didn't work, because you tried 3 times with the wrong password and we locked down your account. Let's go through the dual authentication and we'll open it up, right? That makes the customer feel that we know who they are. But when we talk about mobile, right? When we see that experience, can we send out a text message and say, your account is locked out, go through this process and open it up? Or are we saying, no, you have to call, right? So those are the transition that has to happen, which is from omni-channel to what we are talking about from a mobile first. Because the expectation from the client is, do not force me to stop what I am doing and engage with you on more than 10-15 minutes basis, because it's going to be quick in and out kind of transaction that I expect,
Right.
no matter whether it's financial services or it's my social media. That is the expectation the client base has nowadays.
So, George, you had mentioned earlier that your company designs with mobile first in mind. So what does that really mean when you're talking about the actual solution that's being put in front of the consumer? You mentioned some about working with underwriters to narrow down the set of questions, but the actual other technical aspects of designing the solution, what makes it different?
Sure. So it's responsive. So whether it's a 4-inch screen or a 24-inch screen or anything in between, we identify and maybe make sure that it scales, and that's pretty common these days. So it's a single application regardless. I mentioned the carrier data information, where we can pre-fill information that we pull down from the wireless carrier of the customer, whether it's T-Mobile or Verizon or AT&T, and capture information that way. Identifying that you actually have good contact information. They type in their email address and mobile number, and we'll send out an SMS and an email verification codes. So they type it in. Those codes, we confirm that, first of all, we send terms and conditions along with it, but so we know that they got the terms and conditions, but also that we have known good contact information. So if things do go awry, that the financial institution actually can still follow up. They have a known good phone number and email address that they can follow up with that lead. Using camera to scan driver's license strip information off of, that's a bit cumbersome. I mean, we would drive people more towards using carrier data, because that's extra steps to do that when you can just press a button and pull information down. In the GPS location, so we talk about our multi-layered approach to trying to pre-fill information. If one thing doesn't work, you try the next thing, and we try as many ways to get information in there to speed up the process as possible. And actually, even kind of like laptops now, you see a lot of laptops will have GPS and some of these other capabilities. So I would say it's moving past just specific to the mobile device, aside from the carrier, and just a general approach really across across electronic devices.
So this is great from a product perspective. Is this, and these are nice bells and whistles, is this really helping banks drive new business?
So what it does is it reduces the abandonment rate. I mean, because they'll drop, and typically they're losing 84%, I think it is the number of people who try to apply via a mobile device abandoned. And so we're reducing that pretty significantly by like half through our process, just streamlining it, making it easy to get through, because we can take them what could be a 20 or 30 minute process, down to 3 or 4 minutes. And as I mentioned before, it's as much business process as it is technical processes. A lot of the initial applications, people took what they did on a form, what they did in paper, and said, okay, and they just stick that online. Well, we have to ask, well, we need to know who the beneficiary is. We need to, if they die, it's like, well, they can do that in their servicing application, after the fact. And some of that is education of the customer.
So, Jicken, earlier you were talking about some of the cultural shift that needs to happen within banks, and that's a pretty tall order for a large financial institution, especially. I mean, how do you go about making that happen?
Well, I do agree. It's a tall order, and it's not going to be easy for any bank and SunTrust. So we have taken a comprehensive approach, what we call business accelerator. And what it means is that at high level, it is about bringing business, technology, operations, and partners together earlier to first define what is the right opportunity we should go after. So it's less about technology requirement or solution. It's about how business should think about what are the right opportunities and prioritizing it and going through this, as I mentioned earlier, design thinking process, which is putting customer in the center. And then how you quickly iterate through the prototype and partnership with the external parties to validate through A/B testing and say, is this working? Is this working for the client segment that we are talking about, or in the demography we are trying to win, right? Before we go and spend $5-10 million to buy a software and spend 12 months to install it to validate whether this is a valid business case. So to change that mindset to what I outlined earlier, it is a big change. How do you change the traditional thinking of that I want to, let's say, change a lending system, for example. Normally it starts with, let's find out who has a lending platform, go through the RFP process, right? Let's select one, and then we'll figure it out what we want to do with it. Well, industry, we all have learned, right, that 2-3 years process does not always yield the best results, because the environment we operate in, 12 months is a long time. The industry and clients don't wait for you. The world has changed, the requirement has changed. So how can you reduce that cycle, speed to market, right? From 12, 18, 24 months to more around 4 to 6 months, where you can take the concept and idea and put something in front of client and then learn from it, rather than finishing this journey.
If I could just add to that, I think the biggest change I've seen with banks over the last decade, and I used to work at a bank and now I sell to banks.
And now you're a client, and now you're
right.
working with SunTrust, so why don't you share your experience,
We're working
right?
with SunTrust, but no, but it's partnering.
Yeah.
So if you look at banks, 15 years ago, Cardlytics wouldn't have existed. Banks would have kicked us out of their office. There was no way they were going to partner with a small company to do data analytics for them. What's changed is the banks, I think, have all started to see threats outside of banking, and they're starting to understand, SoFi is a great example. Catherine brought it up in the last conversation. They're seeing all of these non-traditional banks, Google Wallet, Apple iPay. They're seeing all these threats coming in from non-traditional banking sources, and the banks are reaching out and finding partners. Banks are, banking institutions. And I see it with every bank we work with, whether it's SunTrust or B of A. I mean, B of A just moved their entire digital team to San Francisco. That is very purposeful. They now spend as much time talking to Groupon as they do, a banking provider. And so I think that is the big shift that banks are starting to make. They cannot build all of this themselves. The regulatory burdens and processes that they have to go through to build this it's too great to do this type of prototyping that you're talking about. So they really are partnering. That's why our companies exist, because banks have started to partner more.
Yeah, and I would just add too, I think banks are willing to innovate more and innovate with their like software providers like Fiserv as well. And I think that's been a huge shift in recent years. And just even the focus on digital in general. I know a lot of institutions now have a team dedicated to digital banking and the like. And so I think those type of things as they continue, are very important for that mind shift.
Are we seeing banks having people dedicated to that mobile customer experience? I mean, I know they've got solution groups who are either focused on digital or maybe on mobile in particular, but do you see people really focused on that customer experience?
I think in larger ones you do because they just have the capacity. Smaller ones, they just don't have the number of people to do that.
So 2 years back, we were relying on external third party whenever we need design thinking type help. But in the last 2 years, we have built this skill set and capability and talent in-house, and it is working out really well. And all I see is the hockey stick for that particular team and services need, because everyone is realizing that we have to do it. This is no longer an option.
Yeah, I mean, if they can, they do. It's probably the best way to put it. Because I work with larger FIs, we'll have team specific for mobile interaction.
Yep.
So,
But the smaller ones count on Fiserv. I mean, so some way or another, they all have it, right? So,
Yeah.
so if you think about the continuum of the Stone Ages where banks are just, everybody pretty much has a mobile banking application now. A lot of times, as Lynn was pointing out, it's just extending that online banking or usually some subset of that online banking functionality to a mobile device. From that end of the continuum to a bank who's really focused on that mobile-first consumer experience, generally, where are the banks on that continuum? Are they still back in the Stone Ages, or are there some that are getting there?
I think a lot of good progress has been made. Recently we've got a lot of nice new mobile-first type of features that are out there in the market. That are doing well. Like I said, mobile photo bill pay and mobile deposit was so huge when it first came out.
Yeah, that was adopted very quickly.
Yeah, exactly. Yeah. And so I think it may be halfway there, because if you compare us to things like the Amazons and Googles and Facebooks and even Instagram going to social media and what they're doing, I think there's still a lot more that banks can be doing. And then even when you get into things like connected homes, when you said Amazon Echo, I think that's kind of the next level that we're starting to get to with the voice banking or even the use of wearables and doing more with that. So I think good progress has been made, but still more to go.
I agree. I think the banks have come a long way from just being passive and reactive and just waiting for everyone else to figure it out. I think we are past that phase, in my opinion. Now it's more around, let's make sure we are staying together and we all are offering this, right? What's missing is what we discussed from a true mobile customer expectation perspective, but more at the leading edge of it, right? So are banks going to always wait for the traditional retail or the tech giants or startups to offer new functionality and feature, or are they going to start leading in pockets where it makes sense? Because they are sitting on the data-rich environment, they have access to millions of clients. It's very easy for large financial services to use that ecosystem as a competitive advantage against the startups. So far, startup enjoyed it because they were able to disrupt, offer new experience, not to worry about regulatory compliance. I think bank has come at a level now, they are trying to figure it out. Hey, we have a lot of advantage that startup don't have. Like, we have 5 million clients. We don't have to keep worrying about. We can try out few things without asking for any dollars from PE and VCs as part of our natural course of action. When that leap will happen, we will start seeing broader shift.
Well, we've got a few minutes left in our time here, and unlike some of the other sessions, I did want to give the audience a chance to ask some questions. So if we have some microphones around, I see one out there. Anybody's got some questions, you can flag down one of our microphone people.
somebody all the way in the back.
Back there.
Hi, my name's Torrance Gates, and I know you talked about earlier about education through the banking system. I grew up in the inner city where like what was passed down to me by financial knowledge was very small, and I wanted to know what you guys was doing as far as using technology to help guide and people that are underbanked or unbanked to give them the financial knowledge to help build wealth.
So it's a little bit hard to hear up front, but I think the question was, for the underbanked population, what are banks doing to help get education and information, leveraging technology to do that?
So not as a commercial, but I think it ties to the question. SunTrust has invested heavily, and we have this on-up movement. We put a advertisement out in last year's Super Bowl. And in just last 12 months, we have 1.1 million clients signing up to understand what it means to move from financial stress to confidence. So this is one of the way, apart from the other community activity that SunTrust does, to make sure that we are not just looking at client in terms of making money, but actually helping our community and specifically underbanked understand how they can go from their current state to the next better state. And I will request all of you to check out. It's just 10-15-minute process, and it will speak a volume.
A couple of the larger banks have partnered with Khan Academy to do something similar, which is help people understand what it means to be financially secure and what you can do to actually grow your FICO score, for example, or get the next loan that you want. I do see a lot of banks, especially the big ones, all very, very focused on this because there is a huge percentage of underbanked people out there that the banks need to figure out how to develop.
Yeah, I actually saw a study done that it's a consortium of credit unions funded, where they actually went out and interviewed unbanked people, and why are you unbanked? And it was just very, very interesting. I mean, so I know that they're trying to put together, understand, why people aren't opening up accounts with them, and to hear the reasons why, and then think through, well, how do we overcome those obstacles? It was actually pretty enlightening.
Yeah, and then tying back to this topic of mobile-first customers, I remember reading a research 2-3 years back. 65 to 70% of underbanked have a smartphone.
Oh, yeah.
So when the financial services will truly solve for this mobile-first consumer, I'm hoping, right, that we will at least address those 70% of the underbanked with the necessary knowledge and information required for them to know what it means to be financially independent.
And a lot of times it's not even a function of not having the economic means to really have a banking relationship. A lot of times it's somebody had a negative experience with the bank, and so they have avoided it. Sometimes it's just ingrained consumer behavior, where I was observing a focus group one time around how unbanked consumers pay bills. And so we were in Chicago, and they were asking some customers of check cashers, why do you go to check cashers, or currency exchanges as they call them there, to pay your bills? And they said, well, that's how my parents did it, so that's how I do it. And it's not that they didn't have the means. In many cases, some of them actually had bank accounts, but that was the way they chose to do it. Any other question out there? We probably got time for one more.
Just here at the front.
So I'm Steve Redding with Global Payments. I'm curious to know, one of the things that, as I'm hearing, a lot of the mobile-first customers really are the millennial generation. And one of the things that they feel, or from some of the articles I've read, is that financial independence is equated to independence from some of these larger financial institutions. Hence why you have things like blockchain and things that where you see this decentralized type network that people are really being drawn to because they want to rebel against the banks of their parents and the banks of those big ideas that their parents, that perhaps our generation, that's all we knew, and that's what we grew up with. So I'm curious to know, how is it that the banks are truly trying to change the perception in a way that those unbanked people, many of which are intentionally unbanked because they're banked in other ways, right? They're non-banked by being banked with non-banking financial institutions. How are banks actually trying to change the perception so that the attrition of those 5 million customers actually stops and you can attract those millennials to the banks?
So very, very good question, right? I think there are multiple things from my perspective. First is whatever happened as part of financial crisis, right? How do the financial services gain that trust back, right, for the existing client base? And second is how do the financial services start learning the offering of the new technology like blockchain, as you mentioned, right? And what it means. Because if you wait for someone else to solve how someone can, let's say, do their personal will, for example, right? Can you do this through blockchain? Yeah, maybe technology can do that. Do you want someone else to figure it out and become another unicorn, right? Or do you want bank to figure that out? But if you figure that out, how you will add that as part of the value chain of existing product and service without coming across as, this is not the bank I used to bank with, it seems like a technology company. And I think that is going to be an interesting thing for us to watch, that how the leaders of a financial services create this offering without disturbing the traditional trust that this generation has put in the banks, right? And without coming across as, yeah, this might be another startup that may disappear tomorrow, and what will happen to my money? So it's not easy, right? Because on one hand, you want to continue with the trust, you want to offer the next gen technology, and you want to attract them. Do you just create another legal entity? Maybe that's one way to do it. But how long you can continue with that path? So don't have all the answers, right? But I think that's going to be critical for us to watch for next couple of years. I know I didn't answer perfectly, but that's where I am.
I thought it was pretty good. Well,
Thank you.
that's all the time we have. I'd just like to thank our panel here and ask everybody to give them a good round of applause.